Introduction. Welcome to this engaging summary of Mind Over Markets by James Dalton, a book that has become a cornerstone in the world of market profile trading. Unlike traditional technical analysis, Dalton's work focuses on the auction market theory and understanding how price evolves through time. The book is not just about charts, but about how markets truly operate, as dynamic auctions driven by buyer and seller behavior. In this summary, we'll explore how traders can go beyond surface-level price action to understand the deeper structure of the market. We'll break the book down into 10 key chapters, capturing the essential ideas around market profile, volume analysis, trader psychology, and strategy. Whether you're a beginner trying to find your footing or a seasoned trader looking to sharpen your edge, this is your guide to understanding the markets from the inside out. 1. The Auction Market Framework. The foundation of Mind Over Markets is the idea that markets are not chaotic, they are organized around the principles of auction theory. Prices fluctuate because traders are constantly negotiating value through buying and selling. Every trading day is an ongoing auction where participants determine what the market perceives as fair value. The market tries to find balance but is always pulled by new information, imbalance, and human emotion. Understanding this dynamic helps traders shift from prediction to interpretation. Instead of reacting emotionally to price movement, traders learn to observe where the market is balanced and where it's not. This framework removes randomness from the equation and introduces structure. Dalton emphasizes that the market profile tool helps you see this auction process visually. The profile displays price distribution across time. When you approach the market as an auction, you stop chasing price and begin to read value shifts. This makes you more adaptive and less emotional. 2. Time, price, and volume. The three key variables in auction theory are time, price, and volume. Dalton stresses that time confirms value. When price stays at a level for long periods, it shows acceptance. Price is simply the battleground where opinions meet, and volume is the energy of those battles. When high volume occurs at certain prices, that area becomes a reference point for future moves. Most traders obsess over price alone, but Dalton's approach encourages watching how long price holds and how much volume supports it. This trio gives a richer, more stable context for trading decisions. Think of it as a three-legged stool. Remove one, and your entire analysis becomes shaky. Traders must watch where time and volume come together, because that's where market consensus emerges. These zones of acceptance and rejection guide smarter entry and exit decisions. 3. Market Profile Explained. The market profile is a unique charting method introduced by the Chicago Board of Trade and refined by Dalton. It visually displays price over time using letters or blocks, forming a bell-shaped curve. The shape of this curve tells us if the market is balanced or imbalanced. A balanced profile means the market has found fair value. An imbalanced profile means the market is seeking a new value area. This tool is not predictive in the traditional sense. Instead, it tells the story of how the day unfolded and where opportunity may lie next. A key feature is the point of control, POC, the price level with the highest time spent. Also crucial is the value area, the range where 70% of trading occurred. Dalton teaches traders to read the profile to identify patterns like double distributions, trend days, and failed auctions. This perspective changes how you view every candlestick on a chart. 4. The importance of context. One of the book's core lessons is this: no trading signal is useful without understanding the broader market context. Context includes prior day's behavior, trend structure, and overall market tone. For example, a breakout from a narrow range profile means more when you know how long the market has been in balance. Dalton emphasizes that context helps differentiate between noise and genuine change. This is especially important in fast-moving markets where false signals abound. Traders who understand context don't just chase patterns, they interpret them. This means combining current profiles with historical data and volume clues. Reading the market this way leads to decisions based on logic, not fear. 5. Types of trading days. Dalton classifies trading days into recognizable structures like normal day, trend day, double distribution day, and neutral day. Each type has its own implication for price movement and trade strategy. A trend day shows strong directional conviction and offers entry opportunities in the direction of the trend. A normal day indicates a balanced market and suggests range-bound strategies. Neutral days reflect indecision and caution is warranted. Understanding the day type helps a trader adjust risk, time frame, and trade expectations accordingly. Rather than forcing trades, you adapt to the market's rhythm. This daily framework enhances situational awareness. 6. Reading imbalance and initiative. Markets are either in balance or moving away from balance. These movements are called imbalances. Dalton stresses that traders should learn to detect when initiative, aggressive action, is entering the market. Initiative buyers or sellers push price outside the value area. Responsive participants operate within value, fading extremes. Identifying initiative behavior early gives traders a strong edge, allowing them to position ahead of breakouts or breakdowns. These moves often happen fast, so preparation and awareness are key. Volume surges, single prints on the profile, and wide-range candles often indicate initiative behavior. Dalton trains traders to stay alert and avoid fighting strong initiative moves. 7. The psychology of the trader. No trading system works without psychological discipline. Dalton addresses the emotional side of trading extensively. He reminds us that market profile doesn't eliminate uncertainty, it helps us manage it. Many traders fail because they can't accept being wrong or cut losses quickly. Dalton teaches that good traders think in terms of probabilities, not certainties. Self-awareness is critical, knowing when you're trading your edge and when you're being driven by emotion. Mental clarity, patience, and preparation are as important as any chart pattern. Traders must develop confidence in their process, not in individual trades. This reduces emotional volatility and increases consistency. 8. Using market profile in strategy. Dalton integrates market profile into practical strategy through setups like value area rotation trades, POC fade entries, breakouts from balance. He encourages developing a trade plan based on what the market is doing now, how it compares to previous behavior, where value is shifting. This dynamic approach beats rigid rules. Dalton's strategies are adaptable and improve with screen time and journaling. He reminds us that no tool replaces judgment, but profile sharpens it. 9. Volume at price and TPOs. Volume at price shows where most business occurred, a strong reference for future reactions. TPOs, time price opportunities, reveal how long the market accepted each level. When volume and TPOs align, those levels often act as magnets or strong barriers. Dalton shows how to overlay volume profile with market profile for added depth. This helps traders gauge conviction behind price moves. These tools add precision to entry and exit decisions. They also guide position sizing. Stronger areas justify more risk, weak zones less. Over time, this leads to better win-loss ratios and psychological comfort. 10. Becoming a professional observer. The final message is powerful. Great traders are not just decision makers, they are great observers. Dalton urges readers to develop market intuition by studying behavior over time. Market profile isn't about predictions, it's about learning how markets behave. This reduces the noise and increases focus. By watching how auctions evolve, you become less reactive and more strategic. You start asking better questions: is value building or shifting? Is this behavior expected? Over time, you stop reacting to price and start interpreting auction flow. That shift makes all the difference. Conclusion. Mind Over Markets by Jim Dalton is not a typical trading book. It rewires how you perceive the market, from chaotic and random to structured and logical. By adopting the auction market framework, using market profile intelligently, and sharpening your observational skills, you develop a deeper edge than most retail traders. This is a long-term process, not a shortcut to quick riches. But for those willing to study deeply and stay consistent, the rewards are significant. Dalton's message is clear: understanding context, value, and behavior, not just price, is what separates professional traders from the rest.